Hey guys, welcome back. I hope you had a really great weekend. So this coming up week, we do have the rate decision. FOMC is on Wednesday, and definitely that is going to be the highlight of the week. Markets will be bracing for Wednesday, and let's take a quick look at the past week and what happened, maybe past 2 weeks in some cases, and get prepared for this next coming up week. So SPY started September off with a gap down, and from there we dropped. We had a pretty big drop the first week. We from top to bottom saw a 4.38% move to the downside, and then last week we opened with a gap up. And last week we also had CPI and PPI on Wednesday and Thursday, and then we came all the way back up and closed just a little bit short of where we closed 2 weeks before. So just a little bit of that bear gap was left open. So last week we opened with that gap up, and then in preparation for CPI and PPI, we traded sideways. This right here is where we closed Tuesday. Wednesday, we had CPI in pre-market, and the initial move was down. When we came down, we filled that opening gap from the week, and we did get an oversold signal right there. We filled that gap, and then we bounced. We had a huge update on Wednesday. Thursday, we had PPI, and that pushed us even higher. And Friday, we opened with a gap up, and then we pushed right into this gap from 2 Mondays ago. So it's a little bit hard to see on this chart, but the top of the implied move is right here, 563. So after we gapped up, we pushed up to the top of the implied move, and that is where we encountered resistance within the gap. So if you were feeling brave and you took bear call spreads right at the top of the implied move at 563, those would have closed up 100% for you at expiration. We did close $1 underneath that at 562.01. And then switching over to SPX, we saw the same thing over here. We opened the week right here with a gap up, and then before CPI and PPI, we traded flat but up. We did make higher lows and higher highs leading up to CPI, which right here, we saw CPI in pre-market. The initial move was down, and we filled that gap completely from the start of the week. And if I recall, that is exactly where we had the bottom of the implied move as well. So bottom of the gap, bottom of the implied move, and we swung up, and we had a huge day on Wednesday. Thursday, we squeezed higher. We did have hot PPI data in here, so this squeeze, I believe, was mostly a gamma squeeze off of that CPI move. And then on Friday, we gapped up, took it to the top of the implied move, and that is where we saw resistance. If you sold 56.35, 56.45 bear call spreads on the day on Friday, those would have closed up 100% for you. That is the trade I took, and my face looked like this the whole time, but that did close up 100% for me, and my thought process was that we were at the top of the implied move, and we were right in the middle of this bear gap. So SPY did close up 0.52% on Friday. SPX closed up 0.54%. VIX came down 2.99%, and in both SPY and SPX, we did close and trade completely within the implied move. And we did close the week a bit overbought here. And then QQQ, we did open QQQ down, and then from there we did come up, and we got above 474. I'll zoom out to show that 474 in just a minute, but we got above 474, took it all the way to the top of this gap, and we did see resistance at the top of this gap, at least on the day. We didn't quite take it to the top of the implied move, which was 478, but we did close that gap completely from the beginning of the month. And here also at the start of the month, we gapped down and dropped. That was the first week. And then the second week, we gapped up and rallied. And we did have CPI right here, huge move for CPI. PPI followed with a up move, not quite as big as for CPI. And then Friday, we gapped up and filled the gap from 2 Mondays ago. So from where we started the month to where we closed 2 weeks in is flat. QQQ did close up 0.45%. VXN closed down 2.07%, and here we did stay completely within the implied move. And then IWM had a big update on Friday, and this demonstrates something that I've been talking a lot about over the past few months, and that is when we open with a gap completely outside of the implied move, which the top of the implied move was at 214, and that is right where we opened. So we gapped up and over the top of the implied move, also gapping over the 50-day moving average. But when we see a move completely outside of the implied move, we've been seeing a squeeze in that direction. And so far that has held true 100% of the time since I started tracking it. And I've only been tracking it for about 3 months, but every single time we either gapped up above the implied move, we squeezed in that direction. The same for when we gapped down. So if we had made a move all the way down here, outside of the implied move, then we would have most likely squeezed lower on the day. So we did gap up above the 50-day moving average, above the 30-minute 200 moving average, and that first candle we were already above the first two levels, and then we made it all the way to the top of the trading range and we were off. IWM had the biggest move on Friday, up 2.47%, but as for the month, we started the month right here of September and we gapped down, and then we had a really big drop. IWM actually stayed underneath its 35 EMA right here until we saw that drop after CPI, and then it started rallying with the rest of the market. So didn't quite make it back to where we started the month. We are making lower highs here. And even though we did see a huge move on Friday, we are still bearish here, the way these moving averages are set up. So IWM on Friday did close up 2.47%. RVX also closed up 3.92%. That is definitely something to be aware of. And here we did not close within the implied move, but we did get back above the 50-day moving average. And then DIA, we did open here on Friday with a gap up, and we gapped up to 413. That was the top of the implied move for the week, as it was written in options at the very beginning of the week. And we gapped up and pushed up to fill the opening gap of September. So right here, as soon as we hit the top of that gap, we did pull back down. And that is another thing that I've been talking a lot about lately, is when we fill a gap, that tends to turn into resistance, at least within that day. And you can see looking back that we had a little bit of trouble at that level a few times before we saw that big drop. So right up here at 416, that is resistance in DIA, and we did get pushed back down. We still closed up. DIA had the second biggest day on Friday behind IWM. We did close up 0.72%, and we did trade within the implied move on the day, which was the 0 DTE Friday contract, using the expected move on Thursday, and we did not close within the implied move for the week. So we had a really interesting September so far. It feels like the market completely brushed off Thursday's hot PPI data and went straight into looking into this week for FOMC. And DIA also here, from where we started the month of September to where we are 2 weeks in, pretty flat, down just a little bit. All right, that is the past 2 weeks. I'm gonna go set up tomorrow's charts, and let's go check out tomorrow's levels. Let's go check out tomorrow's levels. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, leave me a comment. I do get back to all of them within 24 hours. And if you want to support my channel financially, don't forget about that thank you button. And if you can't do that today, then please share this channel with all your trading buddies. All right, so starting in SPY, tomorrow's implied move is between 558 and 566, and that is from options. The 30-day average volatility is $2 wider in each direction, 556 to 568, and the implied move on Tuesday's contract is between 556 and 567. And to the upside, we have two bear gaps just underneath all-time highs. So the first gap that we come up to is the gap that we started September with. And on Friday, we did fill about 2/3 of that gap. We left a little bit open. And then right above that, we have a second gap. And that goes back to July, where we did make all-time highs. And that is right here. The next day, we gapped down. And the entire second half of August, we tried to fill that gap. And then in September, opened that next gap. So we have these two gaps right here protecting all-time highs. And then above that, the top of the implied move is 566. That is just above all-time highs, which is 565.16. And then the top of the implied move on Tuesday's contract, 567. If we get anywhere near 566 tomorrow, I personally would definitely think 566, 567 bear call spreads would be a great play. And to the downside, we have the 35 EMA, and this is the third day in a row that it is underneath the implied move. Now, last week was a little bit of an exception because we did have CPI and PPI, and that did cause a little squeeze in the market there. But usually we return to the 35 EMA after a big move. So having it underneath the implied move here could signal a down day tomorrow or a flat day. And that looks like it could be even more likely because we have this bearish pressure to the upside. And then underneath that, we have the up gap from Friday. The bottom of that gap is 558.94, so let's call it 559. And that 35 EMA coming up to that gap could give a little bit of support if we do find ourselves down. 558 is the bottom of the implied move, and 556 is the bottom of the implied move on Tuesday's contract. Underneath that, we do have the 30-minute 200 moving average, and the 30-minute time frame did go bullish here with that big move after inflation data. So definitely look to that 30-minute 200 moving average as a possible place of support tomorrow if we do drop. And just remember, the highlight of this week is FOMC on Wednesday, so we might not have a whole lot of volatility until then. But historically, rate cuts are not bullish for the market. So just the fact that we're in the week of FOMC where we are supposed to see rate cuts, we may actually see a little bit more volatility than normal. So then switching over to SPX, the implied move for tomorrow over here is between 55.85 and 56.65. That is from options. And the 30-day average volatility is $15 wider in each direction, 55.70 to 56.80, and that is pretty close to the implied move on Tuesday's contract, 55.75 to 56.80. And to the upside, we have those bear gaps. They are a little bit larger in SPX. They take up almost the entire upper half of the implied move. And the top of the first gap is at 56.50, and then the top of the implied move is 56.65, and then the top of that second gap is 56.66. Then we have all-time highs just above the implied move. For tomorrow, that's 56.69.67, and then right above that, we have the implied move on Tuesday's contract, 56.80. 35 EMA is just underneath the bottom of the implied move for tomorrow. This is the third trading session that we have it underneath. We are definitely due for a pullback to the 35 EMA. Just above that, we do have this up gap from Friday, so those two levels could team up to catch us if we do drop tomorrow. And then the bottom of the implied move is 55.85, 55.75 on Tuesday's contract. And then the 30-minute 200 moving average is underneath us. The momentum is very flat here. So even though I do think it would catch us if we dropped, I don't know if we'd get a huge bounce off of it. And because this momentum is so flat, we did see a bullish cross up right here on the 30-minute time frame when that 35 EMA crossed above the 30-minute 200 moving average. But this moving average is so flat, it could pull us back down. And we are very overbought here. So a pullback towards the 35 EMA and a retest of that 30-minute 200 moving average is definitely a possibility. And you guys saw 2 weeks ago what happened when we left a little bit of this bear gap open over the weekend. The next day we gapped down. So definitely an interesting trading range in SPX. If I'm going to play this mechanically, then if we do get up to the top of the implied move, which would take going through significant bear gaps here, but if we do get up here, then I would likely sell one strike above that, so 56.70. And then if we drop, then I would also look one strike out, maybe 55.80 and 55.70. But let's see how we start the week. And QQQ, the implied move over here is between 471 and 480. That is from options. The 30-day average volatility 467 to 483, and the implied move on Tuesday's contract is 469 to 482. And to the upside, the first level to look for is going to be the top of this gap that we just closed on Friday. So that is also where we gapped down 2 weeks ago. So that is at 476, a little bit above that. And if we do get above that level, then the next level to look for is going to be 480. It is possible that we see maybe the next resistance right here. We saw that a few times. So maybe 477, that's closer to 478. Let's just add that one in there because it could be an area of interest to look for. So 478 right there, and then above that 480. Then the top of the implied move on Tuesday's contract is 482. And then to the downside, we do have 474, and that is a level we have been seeing over and over. Let me get a little bit closer than that. So 474, we did see it as support right here. This was in the last week of June, and then we saw it as support right here in July. And then we bounced off of that level, and then we gapped completely underneath it and dropped. And then when we came back up, 474 was resistance, and then we dropped from there. We took a really heavy hit off of 474, dropped, and then when we came back up, it was a struggle to hold that level, and we are right back at 474. So QQQ loves 474. And so that is just underneath us. 35 EMA is underneath the implied move for the third trading day in a row, and we do return to that level very often. It does act like a magnet, and hold on, let me shorten that back up. It does act like a magnet. You could see that as the market moves, we return to the 35 EMA. So even here with that big drop, return to the 35 EMA. And we just saw a really big move, and we are absolutely due to meet back up with that 35 EMA. And another reason that is highly likely is that we do have the 50-day moving average. The momentum on that moving average is down, and also on the 30-minute 200 moving average right here. So price right now really should be more around this level, according to what we have written in the charts. So 471 is the bottom of the implied move on tomorrow's contract, 469 on Tuesday's contract, And then we do have those two downward moving averages. And underneath that, we do have the 1 hour and the 4 hour. And in a bullish market, you want to see the bigger time frame moving averages underneath the smaller ones. And these are all mixed up. We've got the 4 hour right here, the 2 hour right here, the 1 hour right here, and the 30-minute right here. The market is not bullish here, even though we are relatively close to all-time highs here. And then we are also very overbought here after last week's rally. And then switching it over to IWM, the implied move over here is between 213. Where's 213? Okay, right here, and 220. And that is from options. The 30-day average volatility is $1 wider in each direction, 212 to 221. And the implied move on Tuesday's contract is also 212 to 221. And to the upside, we don't really have a lot of resistance. We don't have any resistance until we get to that gap, that down gap from 2 weeks ago. We did see that big up gap on Friday, and then that squeeze up. So it is possible that we see a continuation of that to fill this next gap at 220. And that's the top of the implied move. And then on Tuesday's contract, 221. If we do get up to 220, personally, I would think that 220, 221 bear call spreads would be a good play. And then to the downside, we do have the 30-minute 200 moving average and the 50-day moving average. The 50-day moving average is right on top of the bottom of the implied move, which is 213. The bottom of the implied move on Tuesday's contract is actually wider than the 30-day average volatility. And remember, RVX, the Russell Volatility Index, did go up on Friday, so almost 4% up. So we're back at 25 here. The market is expecting volatility in small caps. And remember that small caps are the most sensitive to changes in interest rates. So that could be the reason why we're seeing higher volatility readings for small caps. And then underneath that, we do have that big up gap that we saw on Friday. That was the entire implied move on the day. That's what caused us to push higher. It was a $2.50 move, 1.17%. So that's a pretty big gap. And we do have that 50-day moving average in there, the 1 hour, and that could definitely give us a little bit of support going into FOMC. And again here, if we do drop to around 213, or even to the 30-minute 200 moving average, I would think that 213, 212 bull put spreads would be a good play on this side as well. Just the way everything's set up, it looks like the implied move would be a good play tomorrow. And then DIA. We don't have daily contracts here in DIA, only weekly. So I have the implied move for the entire week right here. It is 407 to 422. And we are at all-time highs in the Dow. So right here where we close this gap is almost all-time highs. We had a little bit of a wick right here. All-time highs are at 416.55, and we got back up to 416.31, so just underneath that on Friday, and then we did get pushed back after we filled that gap. So we are at all-time highs, and also we are overbought. And underneath us we have the 35 EMA, and that is currently at, let's see where that's at, 411.95, so let's say 412. And then underneath that we have the 30-minute 200 moving average. Now the 30-minute time frame is bullish right now. We saw that 35 EMA cross up right here. So if we do drop, look to that 30-minute 200 moving average as support. We also have the 1 hour 200 moving average running through the trading range this week. This is extended outward, so obviously the 1 hour 200 moving average is right here, but projected outward, it does cross into our trading range later in the week. This is going to be Friday and parts of Thursday. And then underneath that, we have the 50-day moving average. And we did bounce on that last week. This was after CPI. So CPI was right here. We dropped, and I didn't update this gap, but we filled this top part of the gap, only leaving the bull gap open. So the bottom of that bull gap is our support right now, right? Just above 400. But also that 50-day moving average right there was a support as well. So definitely a few support levels to look for if we do drop. And that's all I'm seeing in DIA going into tomorrow. Let's see how we start the week. Have fun tomorrow, guys. Trade safe. Make sure you take profits when you're up. And I'll see you guys tomorrow night.